India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Thursday morning. We are coming to you from the CNBC-TV18 Motilal Oswal studios. Yesterday was a bit disappointing for bulls because the market gave up gains twice. Once at about 11:30, the second time a little before 2:30. And the Nifty ended flat. But banks is another story. And PSU banks, of course, were what really did very well. I'm Prashant. With me, my colleagues Nigel and Surabhi. Guys, hi, good morning.
Hi, morning, folks. And the good thing is that we had another round of FPI buying. Yep. Though you can never say these days, right? With so many blocks happening, so many companies doing QIP. So whether that's actual real money coming in or not, that's always going to be a little bit of a point of debate on whether the data is skewed.
Well, in political cues, we'll officially have a new chief minister today of Maharashtra. So the long wait is over, and I think the suspense will be ended later this evening.
Absolutely. And did you? All of us watched that clip.
We saw that clip.
That press conference. I mean, I think very few things come close to. I mean, just the moment was something else. Right?
Yeah, absolutely. But yeah, I think the three of them put together.
I am going.
And then Mr. Shinde's quip after that कि कभी-कभी सुबह भी शपथ लेते हैं, शाम को भी लेते हैं.
I mean, that is television for you, right? And it's quite amazing what happened. And of course, today is going to be heated political developments, and really, I mean, actually, it's a holiday here in Mumbai. Schools and I think a lot of that. Those are pictures, of course, from that press conference, and I think I'm not sure if this is after or before that. I think this is maybe as they were sitting down. But I mean, oath-taking here at the government, people are eagerly looking forward to. And of course, then the business of governance under this new government will start. I mean, I think Mumbaikars have also got high expectations in terms of, what the government can do, especially for infrastructure, roads, etc. I mean, simple issues like that, but of course, which matter a great deal. More on this as we go along. But let me just quickly run you through the market cues, really, before we go any further. So equities last night had a good session. They ended higher. S&P was up 0.6%. NASDAQ ended about 1.2, 1.3 odd percent. So it was tech stocks which did very well. Now, I'll sort of, I'm just sort of going in reverse in that sense. But US ISM services data came. It was resilient. But compared to expectations, it missed estimates. You had services, by the way, is more sticky as compared to manufacturing across data points. The 10-year yield, consequently, actually across the treasury curve, there was about a 4-5 basis point sell-off. The yield on the 10-year was around 3.5 basis points. We left off at about 4.19. But it was just not macro markets which impacted, the NASDAQ and how well it did as compared to other indices. You also had results. Marvel Technologies, which does integrated chips, integrated circuit boards and chips, etc. That stock ended 23% higher. It gave a strong guidance, citing robust, strong demand for chips which go into AI demand. And I think that sort of supported the entire complex. So there was the macro, but there was the micro as well, why tech stocks did well. Dollar roughly unchanged, 106.3. You had Fed Chair Powell, who spoke at that New York Times Deal Book Summit, and he essentially, his approach was cautious. He essentially said that the economy is in a remarkably good shape. He did not say this or that in terms of what the Fed will do in December and January. Market pricing in terms of what the Fed will do is also not changed. So if you look at it, for December, markets are pricing about 20 basis point cut, and they're sort of factoring in a pause as far as January is concerned. The other cue today, of course, is OPEC Plus, which is meeting, and oil prices slightly lower going into it, of course, but oil prices yesterday were up about 2.5%. You had Donald Trump, the president-elect, announcing some appointments, and Paul Atkins is the new SEC chairman, Securities Exchange Commission chairman, who's the market regulator like SEBI here. But Mr. Atkins, of course, is also a big advocate of cryptos. And, will cryptos and things like Bitcoin be mainstreamed in over the next 4 years? That's the thing. Of course, the entire crypto complex did very well as well. Just to circle back and tie in the levels, resistance for the Nifty, although we kind of ended absolutely flat, the resistance remains the same. 50% retracement of the entire fall, 24,770. Important support comes in at about 24,281. You could also see, I mean, the last highs which the market took a long time labor to really get above, which is 24,350 or so. That could be the first support. And then the more important near-term support is 24,281, 40 hourly exponential average. Bank Nifty decisively broke above the high of 52,760 yesterday. And this is where, I mean, stuff can happen. If momentum sustains, are we looking at all-time highs? Right? I mean, the all-time high, of course, is 54,467. It's 1,200 points away, about 2.5%. So we'll see if that is possible and there is enough in the tank here. And supports again here come in the hourly average, 52,424 is that number. GIFT Nifty will give you a sense of how we're likely to start. It's about 40-odd points lower. Surabhi.
Okay, well, Asia is actually a pretty mixed picture today. I'll get to that in just a bit. A few more data points from the US. Now, we all know that on Friday, we're watching out for this big jobs report, right? The private sector payrolls data came in yesterday, and that was actually a little softer than anticipated because the ADP report said that the number of payrolls added was about 146,000. The estimates were northwards of 160,000. Not just that, ADP revised its October numbers lower as well. So some softness in the private sector data, but the main one is the Friday jobs report. Now, ahead of this jobs report, the Fed chair is telling us the US economy is looking really good. So just to take that entire statement, Prashant mentioned, I just want to pull out the whole statement. He says the labor market is better and the downside risks appear to be less in the labor market. This is very explicit commentary coming in from Mr. Powell. He says growth is definitely stronger than we thought and inflation is coming a little higher. So it's got the debate going all over again. The probability still is that you'll get about 25 basis points in December just because they did a massive cut with 50 basis points earlier. So how can they suddenly do a knee-jerk reversal and say, oh, now the economy is okay? So that's on the Fed. The Fed guessing will continue. As I said, more importantly, Friday, the jobs data will give us a clearer picture. Now, coming to Asia, markets are a little mixed. The Chinese markets are trading slightly lower. Hong Kong, Shanghai, Taiwan, however, is slightly higher. You're seeing some gains in Japan. The focal point continues to be a lot of this political uncertainty in South Korea. Now, the Kospi is actually, for the time being, it's trading down 0.2% or so. But everything's happening out here from, martial law to not having martial law to now an impeachment of the South Korean president, Yoon Suk Yeol. So that whole political upheaval is very much in focus. Speaking of political upheavals, yesterday the vote in France went through, the no confidence motion. So the prime minister is out. And on the back of that, the dollar-euro has been moving all over the place, but it's stabilizing at around 105, the euro to the dollar. So let's see, that's another watch point when we're talking about global politics. Now let's come home. Yesterday's session, yes, the Nifty managed a flat close, but those sudden drops were very, very unnerving. The good news is that the FPI buying continued second day running. You have a 4-digit buy figure. Almost 1,800 crores of net buying coming in. Now, whether it's through QIPs or blocks, I mean, people argue, and you see the rationale in that. At the end of the day, it's the color of money, and all that money is coming into the Indian equity market, whichever way you're looking at it. Domestic institutions were on the sell side yesterday, almost 900 crores of selling. Let's come to some stocks and news, and you'll want to hear more from our team for sure on this. Vodafone Idea and Indus Towers, both of these will be in focus because Vodafone PLC is going to be selling 3% of its stake in Indus Towers. And Nimesh was telling us about it. He's got it spot on. So more details on this. The market believes that this money eventually will make its way back to Vodafone Idea, though initially the statement said that Vodafone PLC will use some of the proceeds to clear off some of the loans that it has, the dues that it has. Apart from that, Bharat Forge, PG Electroplast, there are QIPs that these companies are doing. So let's watch out for them. There is IGL, which is going to be considering a bonus very soon. So plenty to keep us busy this morning. Watch out for Indraprastha Gas as well. And finally, just placing this on the record, the 11th round of commercial coal mining auctions is starting off. There are 27 blocks on offer. And, as we all remember, and Nigel will tell us more, sometimes if the mine is really hotly debated and it's a very contentious one, sometimes you'll see a flip on these stocks. But we'll watch out for Nigel. You'll remember, I still remember that Gare Parma 4 block. I can never forget because there was intense bidding for that one a couple of years back.
Well, and that was very different, right? Because that was a captive source.
That was a captive
talking about commercial mining. By the way, I think what you need to track right now is Bitcoin. You know why? It's hit that mark. That
100,000.
100,000 mark is what the Bitcoin has hit as we speak. I was just looking at CNBC, our web team has put it out. So 1 lakh on the Bitcoin. But coming back to the equity markets then, today is going to be a big day because we've had a last couple of good trading sessions and today's the weekly expiry, which always calls for some more attention. So can the bulls take the Nifty to those highs on the weekly expiry going to be important. The Nifty Bank, that's clearly the one that's taken up leadership because HDFC Bank has found its form. But for today, can the IT index come to the party? Overnight as well, the Nasdaq was rather strong. So let's see whether or not there is some rub-off on that front. What about the FIs? Well, in the cash market, things are looking much better. And in the F&O market now, things have turned around because now they're adding long positions. And in fact, they're covering some short positions. They continue to remain net short on the index with 62% of the positioning on the short side. But otherwise, we have been seeing these shorts are getting covered out. And now, because of the kind of short covering you've seen from the FIs, on their short positions, that's why at around 83,000 net short contracts, this is the lowest net short position from the FIs we have seen since October 8th. So a fair bit of that short covering bounce has been seen on that front as well. But now cash market buying as well is there to support. The clients, well, they have got it spot on. They have been right, bang on. So they have been booking their long positions and they have been net long for the last two series. And in November, they didn't get much success because the index ended lower. But now, in fact, they're still sitting net long, but they've booked some kind of profits on that front. Moving to the options data, since today is the weekly expiry, well, there's there seems to be a short straddle that's at play. That is, you write the same strike, the call as well as put, and you pocket the premium, which the premium will be roughly around 200, 250 rupees or thereabouts. So it gives you the broad range. On the downside, 24,300 is the mark that you're looking at. On the upside, 24,700. That's the broad range you're looking at for today's trading session for the expiry. The levels that you're looking at, higher levels, well, 50 and 100 DMA. So if you can get past the 24,550, or then you're looking at higher levels that come up for you on the screen. The Nifty Bank, it appears it's got its mojo bank. And now I think the near-term support is that level where, it was having a bit of a tussle. So 52,500 becomes important. The all-time highs are at around 54,500 odd. It looks on course to move out there, led by HDFC Bank. Stocks in focus, there are two stocks that have been running along. That is Graphite as well as HEG. Both of them in the last few trading sessions, they're up between 30 to 40%. That's on the news that, in fact, China has put in some curbs with regard to their exports, but that is on graphite, not on graphite electrodes. So after this kind of move that we have seen, will there be some cooling off? Because graphite is the one that, in fact, is mined. The graphite electrodes is manufactured. So let's see whether or not there is some cooling off. Incred as well has put out their viewpoint that, in fact, things are very, very different. So I'll be watching both these two stocks in today's session.
Okay, all right. We'll definitely look out for both HEG and Graphite. Thanks for that, Nigel. Now that news flash is on, 1 lakh is finally here on the Bitcoin, so all the crypto bulls would be rejoicing. In fact, I'm just checking, checking the others as well on the crypto side. In general, I mean, most of them are up and about. Bitcoin is, the surge this morning is about 6%. Ether is up about 7%. Solana, in the famous Dogecoin, 4.5%. So the whole complex is moving higher, with Bitcoin taking out that big level as well. But let's keep it with the commentary coming in from the Fed chair, as we've been telling you that Mr. Jerome Powell yesterday said that the U.S. economy is stronger than the central bank had expected in September. And the central bank can afford to be a little more cautious. I mean, he was referring to the pace of rate cuts. So he was saying we could be a little more cautious and calibrated. He also rules out the risk of Fed losing its independence under Donald Trump.
The background is that, as I mentioned, the U.S. economy is doing very well. We're in a very good place with the economy. We're growing at, around 2.5%. And inflation has come down. Headline inflation was as high as 7.2 or so. Now it's at 2.3%. And unemployment's at 4.1%, which is a little higher than it was a couple of years ago, but it's still near it's a very, very low level. And, we're not quite there on inflation, but we're still making progress. We were the last major central bank to cut, and we're now on a path to bring rates back down to a more neutral level over time. But you're right, the economy is strong, and it's stronger than we thought it was going to be in September. So the labor market is better, and the downside risks appear to be less in the labor market. Growth is definitely stronger than we thought, and inflation is coming a little higher. So the good news is that we can afford to be a little more cautious as we try to find neutral. I think that what is the case for the Fed being independent? What does independent mean? It basically means that we can make our decisions without them being reversed, other than by Congress, which created it. We're a creature of Congress. We're not in the Constitution. We're a creature of statute. So That's what independent means. And that gives us the ability to make these decisions for the benefit of all Americans at all times, not for any particular political party or political outcome. We're supposed to achieve maximum employment and price stability for the benefit of all Americans and keep out of politics completely. I think there is very, very broad support for that set of ideas in Congress, in both political parties, on both sides of the hill. And that's what really matters. It's the law of the land, and I'm not concerned that there's some risk that we would lose our statutory independence.
Okay, well, things are happening, aren't they? Bitcoin at $100,000 level now. Daniel DiMartino Booth is CEO and Chief Strategist at QI Research, who's joining us. Daniel, it's a pleasure having you here on CNBC-TV18. Good morning. Thanks for your time. So, crypto most likely is going to be mainstreamed, looks like. No longer an outsider in that sense. Paul Atkins is SEC chair, crypto backer, believer. What's your sense, Daniel, and what does it mean for markets as well?
Well, I have a tendency to agree with Chair Powell in that right now, at least, because it's not, it can't be used for transacting per se, that right now it is still what we would consider to be a speculative asset class and really a reflection of risk appetite worldwide and people's rejection, if you will, of fiat currencies and looking to find a safe harbor in the same way that he drew a parallel from Bitcoin to gold. So less regulation, I suppose, is going to ease the path for greater adoption. But again, until it's truly a store of value and a medium of exchange, these are the ways that we define a currency. I would simply say that there's now a greater ability for people to get into the market.
Daniel, hi, good to have you on. So there are a lot of moving parts, right? Because while the Fed chair was talking about the U.S. economy looking better than September, and it has, right? We've seen a lot of the data points since then. Let's see what the jobs report this Friday says, because the private sector report was slightly weak. Which way would you be playing? And if you're talking about deployment, then would U.S. equities still get top billing for you? Or would you look at other asset classes? Are you looking at other emerging markets as we step into the new year?
I think certainly right now that every single valuation metric in the world right now is suggesting that the U.S. stock market is overvalued, regardless of which gauge that you would choose to look at. The skew index, for example, that gauges how far stretched the stock market is as far in the left tail as it's ever been in the history of markets. So I think that there's something to be said for not just the payroll report that's coming up this Friday, but also tomorrow's tomorrow's revisions that are coming through from the Census Department. Actually, Chair Powell mentioned them when he was on stage today. And to give you but one example, when we had the last revision come out, personal income in the United States was revised down for the second quarter by 91 billion. Leaving only 65 billion for the entire quarter. So when you see revisions of a magnitude that wipe away 1.2 million jobs for a given year and more than cut personal income in half, I would say that as from the perspective of the Federal Reserve, you have to be very careful about how you interpret kind of immediate economic data versus what the revisions then show months later. We've already seen in the very short month of December, 3 trading days, 3 business days, 3 very large bankruptcies in the United States, and the layoffs continue to mount. We're seeing it in soft survey data as well, where people are very optimistic about the future, but yet they're still reporting layoffs and at least freezing their job levels. We saw that today in the Fed's very own Beige Book, which is an internal document that's closely tracked by Fed officials.
Hi, Danielle. Good morning and good to see you, Ben. India was your top market the last time we spoke from the emerging market basket. Does it continue to hold pole position?
Well, I certainly think that India is also very high up in terms of being overvalued. There's been certainly a lot of tremendous response to IPOs in India. But we are seeing what I suggested last time, and that is that your central bank is readying itself to be more aggressive in rate cuts going forward. And I think that this could certainly benefit the Indian markets going forward. And again, on a demographic level, unlike so many developed economies in the world, there is so much promise and potential in having a younger population that is so highly educated at a time when American companies continue to cut costs and look to offshore business and professional types of positions into India. So there is still tremendous potential going forward.
Got that, Daniel. It's a great conversation as always. Thank you very much for joining us, and look forward to our next one. Thank you. We'll take a quick commercial break here, but before that, let me quickly tell you what's coming up here over the next 2.5 hours. Coming up at 8:35, Rishi Anand of Bazaar Housing Finance talks to us about the H2 outlook for the business. 9 o'clock, we'll be joined by Gaurav Malhotra. Lots to talk about in telecom, Voda, Indus. There's at block 9:20 a.m. Dheeraj Agarwal of Ambit Investment Managers is our market master of the day. 9:30, Metro Brands, the GOM, GST proposals. Sanjay Kumar Jha of Mishra Dhatu Nigam will join us at 9:40. Lots happening on the defense side as well. A little later, 9:50, we have Aurodeep Nandi of Nomura, who talks to us about impact of Trump tariffs on a market like India, if any. And of course, it's the economy with Lata. She's in conversation with Arup Rakshit of HDFC Bank on what to expect from RBI MPC meet tomorrow.
Well, time to slip into a short break. We've got a lot of stock-specific action to track for you. Get at that in just a bit in our special Top 10 segment. We'll look at Indus Stars, Vodafone Idea, Bharat Forge, Fusion Finance, Hero Moto, IGL, Torrent Pharma, Metropolis, and Unicommerce Solutions. All of them will be reacting to positive news flow, while PG Electroplus, because of that QIP, could be starting off in the red.
Welcome back. So mixed picture across most of the Asian markets. We have lots of stocks to watch. So let's straight away take it to the CNBC-TV18 list of top stocks to watch. Our team is standing by with all of the details. Lots of names to go over, guys. Morning to all of you. But first, the big, block that we're awaiting. Vodafone PLC looking to sell stake in Indus Towers. Nimesh, you were alerting us and it's finally happening.
Yeah, so finally it's happening. Vodafone PLC is going to sell 3% stake in Indus Tower via block deal. The price indication is up to 4% discount, but my sense is the deal will get executed in the block window today, which means it's a 1% discount. Now, in June, PLC had sold 18%, so technically it's a clean-out trade from Vodafone PLC as far as Indus Tower is concerned. The important to watch will be the proceeds. Now, we understand that officially 2,000 crores of this entire proceeds will be plowed back into Vodafone Idea, and Vodafone Idea then in turn will pay back to Indus Tower. The outstanding dues of Indus Tower from Vodafone Idea is close to 3,500 crores. Now, Citi believes that this money will be paid 2,000 crores, which is equivalent to 7 rupees per share. That would be paid out again by Indus Tower as a special dividend. So, Citi and most of the analysts now believe that the dividend yield for Indus Tower over on FY26 and FY27 can go up to as high as 6%. So, 6% dividend yield, outstanding dues getting cleared, a clean out trade. Looks like it's going to be a big positive for Indus Tower in the morning trade.
All right, Nimesh, got that. That's going to be the stock of the day, probably, Indus Stars. Let's find out about Vodafone Idea, though. Towards the end of the trading session, that as well did perk up a little bit. Rima, it's a positive read-through for them as well?
Yeah, a positive, but not a big positive. So first, the news. There is a board meeting scheduled on the 9th of December where they will consider a preferential issue of up to 2,000 crore rupees to one of the promoter entities. Now here, it's likely to be Vodafone PLC. So as Nimesh pointed out, the money that Vodafone PLC, which is the UK promoter, not Vodafone Idea, UK promoter, the telecom company, will be, raising some money via the Indus Tower stake sale. Part of it goes for reducing their debt, and close to about 2,000 crore rupees will be raised by, Indus, by Vodafone PLC, which will be ploughed back into Vodafone Idea, which in turn will be given to Indus Stars. So basically for Vodafone Idea, it's like a pass-through. They're getting money from one pocket, but they will have to give it out to, Indus Stars from the other pocket. So in that sense, it's a neutral for Vodafone Idea. But the other way to look at it is at least the receivables that Vodafone Idea, owed to Indus Stars comes down. So money doesn't go into Vodafone Idea for its own capex and, organic growth, but it will help in bringing down the receivables owed by Vodafone Idea to Indus Stars. So that is a positive. Board meeting on 9th, pref issue of 2,000 crore rupees to one of the promoter entities. We understand that should be Vodafone PLC. So it's part of the same deal that Nimesh spoke about.
All right. And of course, the big one is going to be on AGR, right? And no clarity on whether that will happen or not. That's 40,000 crores. We'll see. But, we'll talk about all of this. Gaurav Malhotra of Axis Capital is going to be with us. And he's going to join us at 9 o'clock to discuss all of this. Now, Bharat Forge is the next one we want to focus on. There's a fundraising exercise. Abhishek is here with details. Abhishek, morning.
Morning, Prashant. So to begin with, Bharat Forge has launched a QIP. The indicative issue price is about 1,290 to 1,320 per share. As per the term sheet, the SEBI floor price is about 1,323.5 per share. So the indicative price shows that it is at a discount of more than 4% to 6.5% with respect to yesterday's closing price. The indicative issue size is about 1,650 crore, and the BRLM to this issue is Kotak Mahindra Capital as well as Morgan Stanley. Now, we also had North America November Class 8 truck orders, which shows that the total orders is down 9% YOY and it's up 18% month on month. The North America Class 8 truck orders are at 11-month high. Class 8 truck orders for more than 30,000 has happened for the first time in 2024. So hence, Bharat Forge will be in focus. Back to you.
Okay, all right, got that. Abhishek, thanks very much. So Bharat Forge on our radar. Sudarshan's joining in. He's watching out for, I think, Hero MotoCorp and IGL. So good morning. What's the news?
Morning, Surbi. So first, going with Hero MotoCorp, we continue to see launches in electric scooter segments, and recent one is Hero MotoCorp launching Vida V2 in 3 variants, and the price of base variant is sub 1 lakh rupees. Talk about some of the features. One, it has 5-year, 50,000 kilometer vehicle warranty. Also, battery pack is covered under a 3-year or 30,000 kilometer warranty, and it will have removable battery, which will allow you to charge at your homes. Now, I have just tried to compare with 2 of its peers, Bazaar Chetak 2903 and Ola S1 Air. So first, talking about the price. Price of base variant is rupees 96,000. It's almost at the same price as Bajaj Chetak 2903, but it's rupees 10,000 lower than Ola S1 Air. Coming to the range, it's almost at the higher range if you compare with the peers, and range is 165 km. And even in the top speed, it is at the higher range if you compare with the peers. The second stock that will be in focus is IGL. It's going to consider bonus issue on December 10, and it's the first time this city gas company is considering the bonus issue, and also amongst all the city gas companies, IGL will be the first company to consider bonus issue. But these city gas companies have been in the focus for the last 1 month, as government had recently cut the APM gas allocation by almost 35% in 2 rounds.
Okay, all right. Thanks a lot for that, Sudarshan. Well, let's hop across to Vinny. She's here with some more stocks in the news. Morning, Vinny.
Good morning. So let me start with some of the pharma names. We have Torrent Pharma that's going to be in focus. We're expecting a green year. Now, the company has entered into an agreement with Boehringer Ingelheim, which is one of the partners of the company. They were already working with them to market one of the brands. Now, they're acquiring 3 brands from the company. This is anti-diabetes brand. So this is going to be a positive coming in for the company. But do not forget that BI will be ending its patent sometime soon. So we'll be seeing other brands also and other companies also who will be tying up for similar reasons. As of now, the market share for one of these GLT-2 brands is around 3,200 crores altogether. So we're keeping an eye on that. It's going to be an interesting one for Torrent Pharma. Let's move on. Metropolis Health, we're expecting green here today on in trade as well. The company is scheduled to meet on December 9th. They will be discussing a preferential issue of equity shares. So keep an eye on that one. PG Electroplast, now the QIP has been launched for the company. They're going to be raising 1,500 crores. Issue price is around 690 to 699 rupees, so some bit of a discount versus yesterday's closing price. So because of of that, we may see some bit of a fall coming in the stock because it's at a discount. It's an equity dilution of around 6.7% of the total equity. So keep an eye on that. And lastly, we have Unicommerce that's also in focus. Now, this is after the company has tied up with a Danish sportswear brand. And this is going to be the brand Will Hummel will be using the e-commerce operations of Unicommerce. So an important one to watch out for there, because Unicommerce in the recent analysis also highlighted that the sportswear and fitness category has done quite well. They've seen a 65% uptick in terms of orders during the Black Friday sale. So it's going to be an interesting one over there, and we're expecting green here.
All right, Vinny, thank you very much for that. And we'll keep an eye out on many of these stocks as we open up. Fusion Finance, stock's been absolutely bombed out, but Abhishek has got news flow. Abhishek, back to you.
Well, Prashant, as you mentioned, the stock has been bombed out. It's the worst performing MFI player that we have seen on exchanges. So over the last 6 months, the stock price is down more than 60% or nearly about 60% so from May to now. And it's also the only MFI player to report net loss for 2 consecutive quarters. So they have a board approval of fundraise of rupees 800 crore via right issue. Board has also approved a pref issue of up to 20% of this amount. So calculation shows that if they raise 800 crore at CMP, the CRAR, that is capital adequacy ratio, will increase to 31.7% from 24.4% that it was there at the end of Q2 FY25. The book value will decline by more than 34% to 164.5 per share, and net worth will increase to nearly 3,323 crores if they raise 800 crores at one go. Back to you.
Okay, all right. Got that. Abhishek, thanks very much. So lots of names over there to track. Let's quickly recap the list. In fact, the stocks to look at today, the ones that have positive news flow around them are Indus Towers, Vodafone Idea, Bharat Forge, Fusion Finance, Hero Moto, IGL, Torrent Pharma, Metropolis Healthcare, and Unicommerce eSolutions. The only stock with negative news flow around it is PG Electroplus, and that's because it's fundraising, the QIP that they are likely to go with. Okay, but the big morning headline is that 100,000 mark has been conquered by the Bitcoin, and we have the Bitcoin and all commodity lady now joining in, Manisha Gupta on the phone line. Manisha, hi, what a morning. So what is it? Is it Paul Atkins at the SEC? Has that been the final trigger?
Oh, well, absolutely. It was last week that we saw 99,640 off an all-time high. So 100,000 was just inches away in that case. But yes, this perhaps has led to that final nudge for you to be trading above 100,000 at this point in time. But even more interesting, Surbhi, is that it's not just Bitcoin which is seeing higher gains. Earlier it used to be a thing that the money would move from one crypto to another crypto and stuff like that. But this time around, the money is coming across. So whether it's about Bitcoin, it's about altcoins, stable coins, meme coins, you have money flowing everywhere. It has been one big run that we've seen it across cryptocurrencies here. So if you look at Bitcoin is up 140% right now, but you have other altcoins which also have gained up anywhere between 200 to 400% in this year itself. So well, yes, this is one segment that the markets absolutely are trading very, very firm on.
Okay, all right. That's the big headline of the morning. And Manisha, once we touch base with you once again, we'll look at the other commodities as well and see what else to track beyond the Bitcoin today. But thank you for that quick synopsis. Bitcoin really moving higher. That's the big one today. We'll take a break on that note, come back on the other side, and we'll have Dipan Mehta of Elixir Equities joining in for some fundamental stock talk. Welcome back. Lots of stocks to track today, and we have Dipan Mehta joining in with some fundamental ideas and perspective now. Dipan, good morning. Always great to have you on the show. So, just taking off from yesterday, the move in PSU banks was absolutely fantastic, right? I don't know if it was all the finance minister speaking, or if it is, I think more realistically, this hope of a CRR cut tomorrow. But your sense, whether you would play for the even a quick trade, assuming that there is policy softness ahead, and if you like anything in the PSU banking space.
Yeah, good morning, Surbhi, and thank you for having me on your show. See, generally, we want to be neutral to underweight banks because there's a lot of competition and the entire NPA also related issues are cropping up in the quarterly numbers. But within the banks, I think the PSU banks, especially tier 2 banks and SBI, their growth rates, their NPA management, their quality levels, technology platform is fast catching up with private sector banks, but their valuations are still at a huge discount. And I think we are seeing a very strong shift of capital moving away from the private sector banks, the likes of HDFC, ICICI, Axis, back into the PSU banks, where I think there's a good trading opportunity. And medium term to long term also, they may outperform the private sector banks. So within the banking space, I think investors are making space for PSU banks at the expense of the private sector banks.
Okay, all right. Got that. Dipan, stay on. We just have to address what was happening with these graphite stocks yesterday, Nigel. And I think you were yesterday also saying that we should just hold our horses. I think you've spoken to a lot more people after market as well. So what's the take?
Well, that's right. You know, what we said yesterday, graphite is mined, while in fact graphite electrodes is manufactured. Now, graphite electrodes, well, they're used for steel making, while the graphite is used elsewhere, maybe in batteries. This entire excitement started because China has fixed the quota on graphite exports. You know, so that's why this entire excitement started. But the graphite that they are talking about and the graphite electrodes that are manufactured by both these two players, which is HEG and Graphite India, is very, very different. You know, and INCRED has come out and they have put some few facts on the table. They're saying that the graphite electrodes are used for electric arc furnaces and they're manufactured from needle coke. So effectively, they have no relation with graphite itself. HEG, neither they mine natural graphite nor they produce synthetic graphite for the use of EV batteries, which is the graphite that, you know, the supply will be restricted coming out of China. And also, if you want to look at it positively, then HEG, they proposed establishing a plant for synthetic graphite production, but that's a few years away. So in short, the graphite that will be restricted in terms of global supply is very different from the graphite electrodes that both HEG as well as Graphite India are manufacturing. And I'll tell you what, things will look up in the second half of the year. But the way the stocks have run up, it appears they've got a little bit ahead of itself. Dipan, what's your view? You know, it's that sort of a market where things get very, very exciting and then, you know, people jump onto it. Yesterday, I think HEG almost ended at circuit. Maybe these stocks are due for a cool off. Your take?
Nigel, these things happen in a bull market and, you know, such misunderstandings, for lack of a better word, can take the stock price significantly higher. Any case, in investor looking for good ideas and new trading ideas and investment ideas. But the long-term prospects of both HEG and Graphite India link very closely to steel industry. And you know our view on commodity stocks like steel. End of the day, I think it's a cyclical business which is valued at very high P multiples. I think HEG goes at 60 times, Graphite about 25, 26 times or so. And there are times when these companies have created a great deal of value when there is something in the sector which results in significantly higher end product prices. But then those also tend to cool off because capacities come into play. It's not that difficult to raise the capacity for the graphite electrodes that these two companies manufacture. Both of them are anyway expanding capacity at a steady pace. So I'm not that keen on any of these two companies for the time being. If there is a cyclical play, then the best time to buy is when they're at absolute lows, which they are not at this time.
Well, the thing is, sometimes people stop asking the most obvious questions, and those are the questions we were asking Nigel, and he was, you know, telling us, giving us perspective yesterday while the stocks are flying. I was also wondering that graphite electrodes are used in, you know, steel furnaces, electric arc furnaces.
Yeah.
And the graphite that's getting banned to the US is, you know, the mined graphite perhaps, or some other category of graphite that's going in defense uses or, you know, some kind of, you know, semiconductor uses, etc. So steel arc furnace, electrode, mined graphite, it wasn't making any sense to me. But I guess that's the market.
Well, that's right. That's the market for your Bhav Bhagwan, right? So we'll have to see how that moves today.
Yeah.
You know, Nigel was saying, Dipan was saying misunderstanding. I call it willingly suspending sort of reality or whatever you want to call it. Kuch to ho raha hai, dekhenge. You know, and
buy now, think later. I call it the buy now, think later psyche.
Well, but yeah, this is important, and I think it's good that we are putting this on the record. We did this yesterday as well. Nigel put this on the record yesterday in the afternoon as well. So, you know, important to remember. Well, let's welcome in the management of Aadhar Housing Finance. They are with us now. The RBI MPC, of course, is tomorrow. Decision will be out. Housing finance is one space which, of course, I think has got the cleanest and the longest runway and the most steadiest runway in terms of growth, unlike consumer finance or MFI or what else have you. Rishi Anand is MD and CEO at Aadhar Housing Finance. Is with us. Rishi, good morning. Good to have you with us here on CNBC TV18 as always. Prashant this side. So how's the quarter sort of panning out for you, Rishi? I'm talking about the third quarter relative to Q2. Is it as steady? Is it a lot of talk out there in the market about a bit of a slowdown at the margin, etc. Have you seen any of it in terms of offtake, credit offtake?
Great. So, morning, everyone. First thing first, Prashant, Nijay, Surbi, it's a pleasure always to come back to your channel. And before I get into answering your questions, I must congratulate CNBC TV18 on completing successful 25 years. Congratulations to all of you and to the channel and to the viewers.
Thank you so much.
Great. Okay, so let me give you a little flavor of what is happening at the industry and what is happening at Aadhar. Versus quarter one, quarter two, we grew our AUM at about 21%, disbursement at about 18-19%, profit after tax at about 16-17%. While I can be quoting, a great deal of numbers on quarter three, but I would say we are on better footing versus quarter two. That's the indication I can give. And I think your opening statement answered all the questions, saying that this is one of the most safest and the most stable, industry to be in. Housing finance, especially after the PMAY 2.0, which formally got launched on 14th of November, has started seeing a lot of traction, seen a lot of movement in the demand, as I would say.
Mr. Anand, so give us some color. I mean, of course, the second quarter was really strong for you. I'm just going back and revising the numbers for our viewers. AUM growth was almost 21% year on year. Even quarter on quarter, it was up about 5%. Net interest income had a very healthy up move as well. Some sense, full year growth, not just FY25, but given this momentum in the housing market, maybe even FY26, what's a steady state number that looks very achievable to you?
So, Surbi, the way we look at the next 3 years, if I were to put at some numbers around 3 years, we are looking at a comfortable 18 to 20% disbursement growth, which will result in about 22 to 24% growth on AUM. NIMs will be very stable at about 8.75, 8.8, while we recorded 9% in the quarter that is under question. But 8.75 is a stable state that we are looking at. So yes, the industry and Aadhar are in for good times, and I'll keep coming back to the PMAY 2.0, which targets the EWS LIG segment. Majorly 80% of the target happens to be EWS LIG, and that's the play area for companies like us.
Hi, Mr. Anand. Good morning and good to see you. And could you tell us what is the current incremental cost of funds versus your average cost of funds? If you could give us a couple of numbers on that. And also, I think a lot of your liability is floating. So whenever the rate cuts come about, you all will be in a good position. Explain that to us as well.
So, Nijay, our YTD cost of fund as we speak today is at about 8.4%. So very comfortably placed. There is a 20 bip hike that has happened over the last 7 months. And from here on, we see, the cost of fund going stable or down, depends on what happens tomorrow. So sorry, I missed your second part of the question.
I think 80% of your liability is floating, right? So when the cost of borrowing goes down, you all will be in a good position. How much of that will you all retain? How much of that will you pass it on?
Okay, so 80% of my borrowing is floating, 80% of my asset is floating. So it's like for us. So whatever comes in is moved back to the consumer. Depends on what is the quantum coming in. If it's like a 5-7 bips, obviously it doesn't make sense to do that whole exercise, the high OPEX exercise. And if it's substantial upward of 25 bips, it will definitely be passed on to the consumer.
Okay. Rishi, the expectation out there is no policy cut, but maybe a CRR cut. If there is, say, a CRR cut of, say, 15, 25 basis points, what will that mean for your cost of funds?
So the way, Prashant, it works for people like us is, we have our borrowing spread across either on a quarterly rest or a half-yearly rest or an annual rest. The moment the cuts happen on the banks change their MCLRs, which will have a I would say a lag of a quarter. And the moment that happens, and based on our rest, the moment it is passed on to us, it is eventually passed on to the consumer. So it might be if I were to do a door-to-door window, it might be anywhere between 3 to 6 months.
3 to 6 months. Got it. Rishi, we'll leave it there. Thank you very much for joining us. It's always a pleasure having you with us here. And,
Thank you so much.
speaking to you and getting a quick sense of, so steady as she goes. And Q3, that is October to December, turning out to be better. That's the indication that Aadhar is getting in terms of offtake, etc. Well, we'll take a quick commercial break here. There's, 12 minutes to go for the pre-open session. Sudarshan and Mitesh are going to be with us with some technical trading ideas. Stay tuned. Okay, welcome back. There's 8 minutes to go for the pre-open session. Mitesh and Sudarshan are with us with what they want you to do as we start another session. GIFT Nifty is indicating a 35-point lower start. Gentlemen, good morning. Mitesh, how would you approach things? Yesterday there was a sharp cool-off. This morning, a small lower start. On the indices first?
Okay. So my belief is that, Prashant, on the index, we had a good breakout about this 24,350, which was recorded on Tuesday. And then we kind of, tested the 24,500, 550 zone, slightly tapered off. Now this zone of, 24,350 will become a very interesting support area. So I don't expect that to be taken out in the short term. Also is the fact that, any declines, I think to those levels, I would be willing to buy over there. So in that sense, 24,350 is the zone for me. And once we get a closing about 24,500, good chance that we are heading towards 24,750, 800 zone. So I have a positive bias unless until we see a Nifty sustaining or breaking below 24,350 zone.
Okay, all right, got that. So, Mitesh, let's also ask Sudarshan what his trading setup is looking like today. Sudarshan, good morning. So, on the index, any trades, long, short, or are you staying away?
Yeah, good morning. Well, there are two undercurrents in the market always. The first is the short-term or the intermediate trend. That intermediate trend for the Nifty, essentially for the market, it's up. We have broken out of a trading range. We have built a small base. So every trader should be looking to buy, whether it's on a breakout, on a dip, but you must have some long positions intact. That's the larger trend which we should be interested in. The second trend is the day's trend. On some days, there is a conviction that today the markets would be likely to go up, so let's go long. Today is not such a day. I don't really have any conviction up or down. And remember, it's also weekly expiry for the Nifty. So it's difficult to say what would happen today. You can just follow momentum as the market builds up, prices. But if you find a dip, be a buyer and make sure that you have long positions intact for the next week.
Okay. All right. Sudarshan, what about your stocks?
Well, it's a all buy list with a lot of mid caps. One of the reasons why I'm upbeat is that as mid caps have been slowly coming out of their congestions and trading ranges, in dips, retracements, and now giving buy signals. Chola Finance is a buy at the stop under 1260. ICICI General Insurance is a buy at the stop under 1880. PI Industries is a buy with a stop under 4100. And Balkrishna Industries is a buy with a stop under 2840. All four of them have similar patterns, sharp corrections, bases, and now imminent breakouts.
Mitesh, what about you? What are your trades?
So I also have a buy list. Just tactically would want to buy it at on any pullbacks also in some cases. So I have a buy on Hudco to begin with. Hudco is a buy with a stop at about 235. Look for a target of around 255 to 58 over here. Then I have a buy on ICICI GI. I think that's a common stock with Sudarshan. Good price and volume breakout. The stop is about 1920 here. So I would want to buy it with a stop just below 1920 and a target of around 2020 is what I'm looking at. A buy on Jindal Steel. That's see, the metals pack has done very well, and if you look at the last few days, especially the ferrous pack is what is more interesting. So I have a buy on Jindal Steel. Buy here on a breakout above 942. That's my trigger. Yesterday the high was 937, so I want to see the stock get past 937, 940 zone and then buy. Keep a stop at about 926 and look for targets of 980. And you buy on LT Finance, which is last in Super Finance, LT Finance. That's a buy. Keep a stop below levels of 144 here and look for a target of around 155.
Well, it seems the street is sniffing something on the fairest names. Let's see whether or not there is some kind of support that is coming in there from the centre, the government of India. Mr. Sajjan Jindal has been rallying for that. Let's see whether or not there is some relief before the end of this calendar year. Slip into a short break. You come back, we'll get you the pre-open rates. We'll also have Gaurav Malhotra of Axis Capital to discuss the telecom sector. Stay tuned. Welcome back. Well, Deepan Mehta is still with us. We'll get the pre-open rates in just a bit. We're getting some initial numbers that are coming for you on the screen, but I think that needs to stable down. Deepan, what about you? What's your view on Bajaj Auto as well as on the two-wheeler pack? Because yesterday there was that nervousness because of that UBS note that spoke about those price cuts. Sudarshan will join to give us some clarification on that. But your view on the stock?
No, I think it's fairly valued, and at a time when so much of competition is coming in on the electric vehicle side, at the same time, the numbers were not absolutely up to the street's expectation, and valuations also are pretty much fair. So let's see how this wedding season evolves for the two-wheeler companies. But at these levels, I think it's more or less fully priced. I wouldn't want to buy into it. There's no trigger for the stock price to go up as well. But on the whole, I think it's fairly valued. So you may remain invested, but I don't think a fresh position should be initiated.
Deepan, a few other stocks. This new listing, Niva Bupa Insurer, I think it's up 30-40% in 2-3 days.
Yeah, Prashant, I'm sorry, I'm not tracking that company, so I wouldn't want to comment on it. But on the whole, I think view on insurance industry is pretty decent. I think good long-term growth dynamics over there.
What about this, the company called Black Buck? Again, recent listing. Sharp run up last few days.
Yeah, Black Box. Yeah, that's an interesting company. And a few weeks ago, you were discussing about which other companies benefit from the explosion taking place in the data center business. And this is one company which benefits from the data center, kind of capacity increases which take place over there. They provide the hardware and the architecture and all the networking equipment and then actual implementation for large Fortune 500 companies, data centers as well, and a lot of other commercial organizations. And large portion of the revenues come from the US market as well. And gradually they are moving up the value chain, which is reflected in higher operating profit margins as well. So very positive on this company. It just has run up a lot, so valuations are on the higher side, but it's a company definitely worth watching.
Got it. Deepan, Honasa, again, bombed out. Yesterday came back up, promoters bought a little bit. I mean, I think it's just it's an indication to the market with that purchase shares. We see that happening. Any thoughts on Honasa? And the other one is life insurance companies. Again, stocks had fallen 20-25%, and yesterday SBI Life and HDFC Life and a few others did well. So your thoughts here?
No, see, I think that Honasa, we need to give it some more time and see how it actually evolves as well, because the numbers were very disappointing. And what I did not like is the management should have communicated this thing in earlier conference calls that something like this is happening and they can expect a sharp decline in the profitability for these reasons. That would have been good kind of communication and transparency from that point of view. And now there's a whole host of uncertainty as to when the sales will start to revive again. But definitely it's worth tracking Honasa, because within the FMCG space, there are very few categories left where there is decent growth. And the categories which Honasa is operating in certainly has got a good, I would say, runway for growth. So we're keeping it under watch. I think 1 or 2 quarters when the numbers are better, you should perhaps have a look at it. Coming to insurance companies, I think, they are great long-term plays and value will get created over time. But as I said, in terms of valuation, our preference is for LIC, where it's trading at a discounted enterprise value. And that also has corrected from its highs. So I would, like to go with LIC. Usual disclosure, we and our clients are invested in it.
Okay, so going with the LIC. in insurance. Yeah, I mean, even if there's some tightening of the bank assurance channel, I guess LIC is the one company that, will not be impacted. Got that, Deepan? Thank you very much for joining in. We will move on now because the sector in focus is telecom, and look at what these stocks are doing in the pre-open market right now. Both Indus Tower and Vodafone Idea, last I checked, they were up almost 9% apiece. Yeah, 10% on Vodafone Idea. Indus Tower has now cooled off a little bit. It's a more measured 4-5% move. But why the excitement? In case you've missed the news overnight, Vodafone PLC is going to be selling 3% of its stake in Indus Towers. And the street believes that, a nice chunk of this money eventually will make its way in Voda Idea. And then Voda Idea could be using some of this money to repay its dues to Indus Towers. So that's how both the stocks are quite excited.
Should be has sold. The block has happened already.
Oh, okay. Yeah, while I took my coffee break, I think. All right. So the money is basically going to start trickling in. Now, where does it leave things with respect to Voda Idea? I mean, this is a small trickle, perhaps, of fund infusion that's happening. Let's ask Gaurav Malhotra. He, of course, tracks the telecom space. He's executive director at Axis Capital. Gaurav, great to have you on the show. So the block has happened, as Prashant was pointing out. What do you make of the development? And let's talk about your rough estimates in terms of the money flowing back to Voda Idea and maybe in turn to Indus.
See, the thing is, Indus is selling around 2,800 crores Vodafone is selling 2,800 crores in Indus, out of which 2,000 crores is coming to Vodafone Idea. Right now, this is actually part of the security package which was agreed to during the Infratel Indus merger, that there will be some second lien on some stake of which Vodafone owns in Indus for the purpose of repayment. Now, from our perspective, see, Vodafone has been repaying its outstanding dues back to Indus over the past few quarters. So the peak was around 5,800 crores, which end of second quarter was around 3,500 crores. So 2,300 crores has already been repaid. And in the last quarter, actually, 1,100 crores was repaid. So our base case was that, Vodafone will use its internal accruals to repay the remaining 3,500 crores over the next 3-4 quarters. Now, with this 2,000 crores, maybe this gets accelerated by 1 to 2 quarters. So nothing really changes from our perspective, whether it is for Indus or for Vodafone from that perspective.
Okay, but I guess it gives the comfort that the money may be just coming a little earlier than you earlier expected. In that sense. And I get it. I mean, for Vodafone Idea, this is, I think, a very small part of their overall, situation that they have to look at. Do you have coverage on Indus? For Indus, things seem to be a lot more clearer. What's your view on Indus overall, beyond this development?
See, the thing is, the way we think about Indus, obviously, things have improved majorly from the past 2-3 years. But in some shape or form for Indus, a large part of Indus's incremental revenues being built in by us and by consensus over the next 3 years is premised on Vodafone expanding its network the way they have guided to. And that network expansion is premised on the equity plus debt fundraise. Now, equity fundraise has happened, but the debt fundraise, there has been certain challenges. So to put things in perspective, 40% of the incremental revenues of Indus over the next, say, 3-4 years come from Voda. Now, if there is some challenge or issue with that debt raise, whether in terms of quantum or timing, then obviously that creates an uncertainty. So from that perspective, we are not sort of positive. We have an ad rating on Indus. We feel that, we require clarity on the debt raise in Voda Idea for us to get more constructive. Stock obviously has also run up quite well over the past say 12 to 18 months.
Okay, that's really interesting. You're saying 40% of Indus's incremental revenues are dependent on Voda, not so much on Airtel or the other telecom players, which obviously need the tower infrastructure as well. So that's interesting. That's on Indus.
Bharti has already done majorly of the 5G rollout. So Bharti will continue to roll out. But going forward, with that 50,000 crores, 50,000 crores, that obviously part of that will be spent on the network, which will come on Indus Towers.
Okay. So Indus's fortunes, incrementally, if you're talking about fresh triggers, are in that sense very closely linked to Vodafone Idea. That's important to keep in mind. On Vodafone Idea itself, the next watch point or the next trigger, anyone's guess, right? They're getting this reprieve on the bank guarantees at least. So that's a good news that sort of came through. What else would you recommend on Voda Idea? And also just leave us with perhaps a quick view on Bharti as well. If you see any major upsides ahead, maybe more tariff hikes ahead.
See, in terms of Voda, the next trigger obviously is, in the management in the earnings call had mentioned that banks are looking for certain clarity on the AGR dues, before which there's some conclusion happens on the debt raise. So I think the next trigger for Voda Idea is obviously the debt raise. I think that is what everyone seems to be waiting for, including us. In terms of Bharti, Bharti continue to remain positive. It continues to execute well. In terms of tariff hikes, we feel that, going forward, the frequency of tariff hikes could actually accelerate. The last two hikes have had a 3 to 2.5 year gap between them. But given that the transmission of tariff into the ARPU and revenue for operators has moved up quite sharply, for Bharti it was almost 80% in the last hike. So going forward, you don't need to take very large hikes to see a decent uptake in ARPU. So maybe that 2.5 year gap can sort of reduce to 1.5 or 2 years in the next hike, because you don't need to take a very large hike. So that's the way we are sort of thinking about the frequency of tariff hikes. But on the whole, we are generally positive on Bharti.
No, absolutely. And by the way, are you inclined to believe that they will get, because AGR, Gaurav, is the big one, right? And are you inclined to give them the benefit of doubt that something will be worked out?
See, we feel that eventually there will be some sort of equity conversion for some part of the dues. I think so. That's the base case which we are sort of working.
Okay. So not a clean kind of reversal of what was said earlier, right? That is not that's not the base case.
Yeah.
Okay. All right. Got it. Gaurav, I mean, in terms of telecom equipment players, do you have coverage at all?
No,
on names like Tejas Network, etc.? No. Okay. All right. We'll leave it there then. Thank you very much for joining us. Appreciate you being here on the channel this morning. Thanks very much for taking those questions. I think, there's 4 minutes to go for market open. Let's get the 9-10 calls out of the way. Mitesh and Sudarshan are back with us. Sudarshan, what do you have?
I will buy ICICI GI with a stop number 1880.
Okay. That's a general insurer, ICICI Lombard. And Mitesh, what about you?
I would have wanted that as well, but I'll go with the Hudco. See, it's also managed to get past its 200 average, which it was struggling for the last 3 days. So Hudco should see levels of 255, 260 very soon.
Okay, Hudco and ICICI Lombard. Gentlemen, thank you very much, both of you, for joining us. Let's shine the spotlight on Bajaj Auto once again. Sud is here with that. Good morning.
Morning, Prashant. So yesterday there was a note from UBS saying that Bajaj Auto has taken price cut for select variants of Pulsar and some of the variants of Freedom 125 CNG bike. Now on that, Bajaj Auto has clarified, it has said that top-end variant that forms 72% of total sales of Freedom 125 bike, company has not taken any price cut for the same. Since beginning, price has been the same, that is rupees 1.10 lakh. Now, the price has been revised for the base variant and it's just to reach the larger audience. One more thing is that mid-level segment. Company is saying that during the launch that what company had announced for the mid-level segment, it was different from what now the company has launched in the mid-level segment and it's in the price of rupees 95,000. Another stock that will be in focus is Bharat Forge. Now North America Class 8 truck orders have come and orders have seen a strong rebound. On month, it has increased 18%. YY, it's down 9%. But the orders are at 11-month high, that is highest since December 2023. And apart from this, there is one more news. Bharat Forge has launched QIP to raise up to rupees 1,650 crore and indicative price at a discount up to 4% to yesterday's closing price. So keep an eye on these two stocks.
All right. So thank you very much for that. That is the list of names that we're watching out for. I mean, of course, the two straight outright kind of movers are Indus Towers and, what happened with Vodafone Idea, 5 and 10% respectively. There's, of course, Bharat Forge, there's Hero, there is Bajaj. Fusion Finance, maybe we could look at as well. Abhishek was giving us that indication earlier. That's the biggest underperformer as far as the MFI space is concerned. Stocks down about 60% from its highs. Torrent Pharma maybe as well as was highlighted earlier, perhaps something to look out for. So there is a fair bit happening.
Graphite India cooling off a little bit, down close to around 2%. HEG is trading more or less flattish. We don't know about the stock prices, but we can tell you fundamentals. And, the fundamental news flow didn't really warrant that sort of a up move that we saw in both those two stocks. Just laid that down on the table for the time being. Graphite is down, HEG a little bit higher in trade. So let's see how both these two stocks go.
Maybe as I've been saying, we've been inviting both managements to come and sort of speak with us. So we'll have them join us and sort of talk to you directly as well. But I think we put out the information that maybe this is, the China news flow in that sense is really unwarranted. If that's the reason behind this near 30-40% rally that we've seen on both stocks in the last two trading sessions. We've got a few seconds to go for the market open. We'll look at the prices and then we'll look at individual names and how they're starting. So the opening bell, 71 points higher, 24,540. You've got the sensex, which is starting at about 81 something. You've got the mid-cap index, which is starting in the green. Bank Nifty is absolutely flat. Actually, the open seems to be like what we actually got yesterday. So nothing on it very much. And then, of course, there was a big spike and then there was a big sell-off. So we'll see. IT index is down about 0.4%, 44,156 on the Nifty IT index. Advanced decline very early, but still it's positive. And the heat map on the Nifty is up on your screen. It's more up than down, at least to start. Surabhi.
It's far more quiet, more measured today. Basically pausing for breath. The large cap screen is seeing 32 points for gain on Nifty, but mid caps are also quiet today. Just about a 0.25% increase. Slow and steady, so let's see if it builds. But in terms of gainers, you have the IT names right on top. Infosys, TCS, about 1% each on those two stocks. Hero Moto is up about 0.5% as well. Apollo Hospitals is having a positive opening. Reliance is up 0.5%. Some of the insurers like HDFC Life are still notching up a little bit of green. Airtel, Bharti Airtel, it's been cooling off for the last 2 days. Today, finally, it shows up on the green side of the screen. But anyway, the first major trend of the morning is large cap IT. Wipro, Infosys, TCS, all of these stocks are up and about. Let's see what's falling then. A couple of PSUs come up on the screen immediately. Power Grid, NTPC, ONGC, all of them are cooling off. The cuts are not deep, just 0.5%, 0.25%. But this is what's bringing up the downside. HDFC Bank is the other one that's keeping a lid on the gains. So even SBI is weaker. So after having a fantastic week and running hard, the Bank Nifty is cooling off. In fact, it's flashing a little bit of red as well as we speak. So very quiet. IT up, banks down. That's the large caps.
Well, that's right. That's why the sector of the morning that I'd given was IT index, because overnight as well, you had the Nasdaq did it quite well. And a couple of companies have reported fairly decent numbers with positive guidance going ahead. So today it seems the tech index is back in play. Divi's Laboratory, I'm not sure what's gone on over there, but that stock is down close to around 5% as we speak. So it's falling on very, very large volumes. So that's the stock on the downside of the morning. You have Genius Power as well. That stock has seen some profit taking and made a fresh 52-week high, but now it's down close to around 3%. The one on the upside, though, is Juniper Hotels, the largest owner of Hyatt Keys in India. They have a brokerage note coming in from CLSA. They've initiated buy with a target price of 430 rupees. So explains why that stock is flying away as we speak. Very, very strong move is what we're seeing on that particular name. A few more movers from the broader market should come up for you on the screen. HEG is up another 4% now, so they've had a bit of a dip, but that's moved up yet again. So we'll have to keep an eye out on that one. Fundamentally, I don't think it's warranted this sort of a move, but yeah, that stock is up close to around 4%. Niva Bupa, last couple of days the stock has moved up. Today as well, the stock is up close to around 3% or thereabouts. Very, very limited float. I think there's only 5% of free float in the market. And Ola Electric, after the good run that it's seen in the last few days, from 70 to around 100 rupees. Now the stock is down close to around 1.5%.
All right. Well, that's a list of names which are moving around. And we've got 30 points now on the Nifty to show for it. And 24,500 around is where the Nifty is hanging on to. So there is a fair bit which is happening. I mean, HEG, it's moved from 400 to 600 and in 2.5 days, 2 days and 2 minutes. That's 50%. Very few things should move a stock 50% in 2 sessions, let alone what's, of course, gone on. So we'll see. what happens. For now, it seems to be in a strong momentum grip. We'll have more on this one.
You know, but Prashant, sorry to come in over there. There's divergence between the twins today. Graphite is down, HEG is up. Nigel, you were telling us one of these companies is setting up a plant in the future, right?
Yeah.
For synthetic.
HEG has announced that they will be setting up in the future.
This is synthetic graphite.
Yeah. This is the graphite. I mean, it has some relation over there. It is at least 3 to 4 years away, and it will come with a big capex as well. But you know, for the time being, it's up. In fact, it slipped a little bit from the top. Graphite India is down. I've spoken to a couple of buyers of graphite electrodes as well yesterday. You know, that's the research normally I do. And they also said, Nigel, there's no relation whatsoever. You know, not that graphite electrode prices are moving up. Otherwise, the steel companies would be crying foul, you know, what's going on out there. But that's a large trade that's taken place. 30 lakh shares have changed hands. So maybe that explains why we're seeing a bit of an outperformance on HEG.
Yeah.
But I think some kind of cooling off in the near term could be warranted, but we'll have to see how that goes.
Okay, well, more on graphite electrodes. I don't think we've spoken about this much graphite and electrodes.
No, we've spoken about this in 2018.
17 or was it 18?
17.
When these stocks, the huge move started.
They went up.
No, I'm saying not this early.
You know, at that point of time, everyone was talking about that. And the stocks, they went up one way.
They I mean, go through these years of massive outperformance and then for many years.
And to be fair, when the management joins us, they said, Nigel, please don't remind us about those days. Those are the days we're making 65% margins, and now they're struggling at 20% margins as well.
Okay, well, let's move on to a few other things. Deepak Fertilizer, 3% higher, 1385. Stocks up, and you know what? It's doing well. It's got decent sized volumes as well. I mean, maybe it's too early, but volumes are a little on the lower side. You know, last 2 days, volumes quickly ramped up in the broader market as well. Kaplan Point is up 5%. I'm not sure if there's any news flow, but again, this one has also moved up very sharply from 1900 levels to 2500 levels in about 5 or 6 days. That's Kaplan Point. Skipper Limited is up 7%. Skipper is a big mover. Again, it's coming up, it's within the top 5 in terms of volume-led gainers right now. There is Reliance Power, which is up 5% as well, about 43, third biggest volume-led gainer. And there is Tejas Network, which is up about 1.5%. I think from the highs of the day, which is about 1400, it's already come off about 60 rupees. So those are a few others. Atul Auto, oh my God, what a move. Atul has moved again 550 to about 700 in about 4 days. Today is the 4th day. And coming up with strong volumes as well for this point in the day. So that's essentially what you have. Divi's, Nigel mentioned, 4.5%, 5% lower. Ola, I think we mentioned. NTPC Green is the other one, right? I mean, ramped up. The high yesterday was about 155 and it's cooled off to about 145 right now. And Genus Power is down about 5% as well. It's got decent sized volumes. Genus Power at about 442. PVR Inox Pushpa 2.0, but you know, it's down about 1.25% for now. Manappuram is down about 1.25%. And keep an eye out on some of these PSU banks. They all did very well. And at least the start seems to be a little more subdued. Names like Sirma, they all also came off about 2.5% yesterday. Sirma, and I think there was 1 or 2 other names there. Another 2.5% cut. Honasa was up 10% yesterday. It's down about 2%. So yeah, things are happening and things are moving and more stuff is coming up on our screens, which we will continue to highlight. Dheeraj Agarwal is our market master today, Managing Director at Ambit Investment Managers. Dheeraj, good morning. Great to have you with us here. Thank you for your time. I mean, the banks are essentially what have come back the fastest. The Nifty bank is about 2% from its all-time highs, Dheeraj. What's the environment like? I mean, 2024, you know, news channels, we look at the end of the year, we look at what have been the big themes. One of the big themes that we kind of identified is that 24 has been the year when the central bank really cracked the whip in terms of asking financial entities to toe the line, both in letter and spirit. Right? So much happened there. Do you think 25 maybe we'll see, you know, that them taking the foot off the pedal a little bit more easy, light touch regulation, or you think it'll be as tight and as hard?
It's a difficult thing to forecast, right? I mean, I don't really know what's the RBI's mind at this point, but it looks like and RBI's or the regulators' strictness, for the want of a better word, on the sector has been long coming, because it's not that they've suddenly tightened on the screws at this point of time. They've been actually warning about rampant growth in unsecured lending book of the banks as well as NBFCs, and they've been slowly indicating that this is a risk that we've been watching. So them coming a little bit harder on trying to prevent something untoward happening in that space at this point of time was not totally unexpected. And I don't really think, I mean, there might, so there are two different parts to it, to your question. Would there something to ease the liquidity in the system? Perhaps yes. Would they ease the regulation to undo what they have done in the last few months? I think not. I think unsecured lending is perhaps still in a little bit of a risk area, not for everybody, but for some people. And RBI will continue to watch it very closely, I think.
Okay. You just put up the Vodafone Idea stock. That is now in the, I think it started higher. The pre-open, at least, we were looking at it up being about 10%. Vodafone Idea, if you will. I think the high has been, yeah, you can't see it, but there was a sharp ramp up. The high was made at about 8 rupees 79 paise, and it's just a complete collapse since then. And now we're about 8 rupees and 30 paise or so. That's down 1.5%. So it's a big move which has happened already within the first 5 minutes or so of trade. So that's Voda Idea. And the second one is Indus Tower. Maybe we could just quickly look at that one as well and see if that has also given up gains. That is also come off very sharply. Look at that. Indus Tower, I think the high has been made at, the high is about 375. And the stock's at about 360 now. So both Indus and Voda, after a sharp ramp up, selling off very, very hard. Surabhi.
Okay. So, yeah, the analyst told us, right, that incrementally, what does it do? Voda Idea, they have far bigger issues than, a little bit of money that's coming in. And even that 2,000 crores that comes into Voda Idea, they anyway will have to give it off to Indus to pay off the dues. And for Indus, why is that not too much of a hurrah moment? Because like the Axis analyst told us, that it was anyway being penciled in that Voda will pay. Maybe with its internal accruals, but it'll pay in the next couple of quarters. Now it just gets accelerated with the fund infusion happening from Vodafone PLC. Dheeraj, hi, great to have you on. I have a question around this whole FPI selling business, right? Last couple of days have been a little better. We've got some buying, 2,000 crores odd buying coming through. What's the chatter you're hearing? I mean, this home market bias is still so strong, right? You can buy stocks in America, buy bonds in America, now buy crypto in America. So one can understand the compelling reason to be in the US. So where do we figure in the larger scheme of things as we get into the new year?
So, I mean, while there are two parts to it. So while India's weight in the emerging market indices is now quite high, 18-19%, very close to China. One should keep in mind that our weightage in the global benchmarks are still in the 5% kind of a range. So from most global funds point of view, we are still quite small from that perspective. And hence, India literally becomes from most, I mean, there are about 27, 28 or about 30 odd trillion dollars of total equities under management globally. And India has a FI holding to, there would be about $1 trillion. Just India, from a global standpoint, still forms a little bit of a diversification, a little bit of that additional zing that you add to your portfolio because it's a faster growing economy and you can find stocks here which can beat the benchmarks, etc. So it's becoming a little bit more of a bottom-up market. So my sense on the FI selling is, I mean, it's very difficult to pinpoint the exact reasons, but with the US elections, there were greater expectations of tax cuts and hence US companies doing better in the short run. There were perhaps expectation of dollar strengthening even further, which is always negative at the margin for the leverage money which might have come in. Mind you, I mean, that's not all of the FI money which is coming, right? So the leverage play is always small and at the margin, and it tends to come in and go out very fast. And maybe bulk of it has already moved out and we are back to status quo and back to business as usual. So I think global investors will keep India in their portfolio despite a strong home bias and despite a very strong performance in the US market at this point of time, because there are opportunities here which can do better and are doing better than even some of the benchmark large cap names in the US.
Hi, Dheeraj. Good morning. Good to see you in. No, I'm not going to ask you about Zomato, but what about Swiggy? Is it looking enticing enough? 55-60% discount in valuations in comparison to Zomato. And the management intends on doing the right things. They're sitting on cash as well of around 8,800 crores, and they sounded quite optimistic when they joined us yesterday. Do you believe that this can narrow the valuation gap with Zomato?
It's a tricky call. So without commenting on the valuation specifically, one thing I can say is that Zomato, in terms of their performance metrics, is way, way ahead of Swiggy at this point of time. And that's what the valuation gap shows. And Swiggy will have to do a lot more work to bridge that gap, if at all. So it's not easy. It's not easy. Zomato has taken a big lead. Blinkit, which is now the current driver or large driver of Zomato's valuation, is doing exceedingly well and much better than the peers. So the valuation gap is largely due to the performance difference as well.
So you stick to what you liked in the past then? Dheeraj, you would rather stick to what you liked in the past?
That's right, yes.
Okay.
Stick with the leader, stick with the top market share company, unless there are some strong reasons to change. I mean, just chasing valuation gaps is not usually a good idea.
Dheeraj, okay, so got it. So Zomato remains your top choice. And I'm pretty sure we're not going to speak again before the end of the year, Dheeraj. So tell us, give us, two scintillating ideas for 2025. Okay, maybe Zomato is one. Give us two more, so that'll make it a nice three.
And just to set the record straight, I mean, I never said Zomato is one of my topics. I like the company. And
businesses that you like. I'm not asking for a specific buy call on a stock.
Yeah.
But, businesses that you like, companies which are doing a great job and you think there can be a value created.
See, at this point of time in the market, the one message that I want to leave for 2025, instead of going into specific stocks, is that the biggest learning from the October sell-off for me was that the companies, even if the companies which are very, very loved in the space right now, if there was even the slightest amount of earnings disappointment, the stocks were getting punished really, really hard. So what this tells me is that in many of the loved sectors, the valuations are priced to perfection. And hence, going forward, narratives will not work. It will be numbers which will drive the stock prices in the markets, which will make stock picking harder than what it was in the last 3 or 4 years. We'll have to focus on numbers with a microscope. And gone are the days where just because a company is loved, just because the story is loved, even if the numbers don't come in, the stock prices keep going up. So that environment has certainly changed. And that's what my key message is. At this point of time, it's very difficult to say which sectors will do well and not do well. I think it's more about which individual stocks within those sectors are delivering the numbers and can actually outshine. So 2025, I forecast, or I see a market of huge dispersion, where within a sector you might see stocks falling 20-25% and stocks running 25-30%.
So it's going to be the year of a stock picker. Can't paint everything with the same brush. All right, Dheeraj, great speaking with you, and wish you a very happy new year in advance, and look forward to more conversations in 2025. Well, the market's holding on. I mean, not much has changed, about 50 points higher on the Nifty, so it's quite steady. Bulls are trying to build on the small gains at the start. Mid-caps are doing slightly better. But the one stock that's already under pressure so early in the morning is actually Divi's Laboratories. Let's pull up Divi's. It was down, I think, 5% last I checked it. About 4% lower. Let's ask Vinny if there's anything new. Vinny, what are you picking up?
So, what has come overnight is that Novartis, which is an innovator, has lost an appeal against MSN in the US District Court. Now, what this means and why is it important for Divi's? Because Divi's is the API CDMO supplier for Novartis for this drug called Entresto. Now, Entresto drug was a big one in the CDMO portfolio for Divi's as well as the API portfolio. And that is why the impact that we're seeing coming in, because Novartis lost this battle against MSN. And now this means this ruling will indicate indicate that there will be more generic players that will come in at the near term in terms of a competition for them, and that could mean that this could impact in terms of the volume of take for DVs. That is what the analysts have also highlighted. So that is why we're seeing pressure coming in, because the innovator has lost the battle in the US District Court, which means the supplier DVs will also face some bit of a volume impact coming in for the CDM and the API side, and this is for the Entresto drug.
Okay. All right, Vinny, we'll keep it on the radar. Thanks very much for getting us the latest on divvies. Could be the reason why the stock is under pressure because of the fear of maybe lesser revenues from that drug in the US markets. Let's move on now. The next company on our radar is Metro Brands, and there's so much that's happening within the footwear sector. Now, this all ties back to the story that our colleague Tim C did on GST, right? We all remember that this is a larger thing. It's not just shoes alone. Basically, the group of ministers seem to be of the view, and this is perhaps what they are going to be proposing to the GST Council, that differently priced items in the same category, for instance, shoes or watches, they should be taxed differently. So there is some thought that shoes which are above 15,000 rupees a pair should be taxed now at 28% GST and not at the 18% slab. Let's try and understand the implications with Mr. Nissan Joseph, CEO of Metro Brands. Mr. Joseph, great to have you on. So, Anjan, now it becomes very important for us to understand that from Metro's perspective, out of your total inventory, how much would be above 10,000? How much would be above 15,000? Because you do have a lot of the top-notch brands like Fila, Vans as well. So give us some sense, because there is this view building that higher-priced footwear should be taxed more.
Yeah, I know. When you say there's a view building, I think you're implying that there's a proposal in the government to raise the taxes over 15,000 rupees. When you look at the business over 15,000 rupees for an individual item in the footwear business, it's very limited, right? It's not a huge market. So one could also argue that raising it does not help neither the center nor the consumer necessarily. All it might do is slow a little bit of demand in that sector. So I think it's a small piece of our business right now, so I'm not really focused on it.
Much? We just need to know. Is it 5%, 10%, less than that?
It's in a single-digit range, Surabhi. So.
And this would be pricing above 15,000, right?
Correct.
What about 10,000? If we just from our perspective, because we don't know what the final slabs would be or the threshold levels would be, how much of your business is footwear above 10,000 rupees?
So I don't think we bifurcated necessarily by that. We look at our footwear business over 3,000 rupees as we've shared in the past publicly. And, that's not a number we've divulged out. So what I can share with you is that over 3,000 rupees, we do in excess of 50% of our business. So you can extrapolate that number. There's going to be a, markedly downward sloping curve on that price to demand ratio there. So it's just not something we publicly discourse. And furthermore, we don't like to speculate on what the government is going to do.
No, that's okay. But we'll work with what you've told us, that business or, footwear above 15,000 is, the contribution is in single digits to the overall revenue, right?
Correct.
We'll work with that.
Okay, so Joseph, good morning, Prashant here. But, the story has been premiumization, right? The hope has been that not just you, but other footwear makers and so many other industries will keep going up the value chain, not trade down, but trade up. Consumers also. So they'll, effective purchasing power of consumers will keep going up as per capita goes up, and people will be able to afford higher priced products, which means higher margins for you. So just your sense of how if this does happen, this does go through. I mean, how do you read this, the proposal itself and the thinking?
So premiumization is a little bit in the eye of the beholder, Prashant. So for somebody that's buying a 2,000 rupee shoe, a 3,000 rupee shoe is premiumizing their purchase, right? So there's a huge amount of people in that 3,000 to 10,000 rupee space that we cater to. We're not ignoring people underneath the 3,000 rupee range either. So premiumization is really to some form relative to where you were, right? It's aspirational, but aspiration starts with, I'm here today, I want to be there tomorrow. And that's how we look at a customer's journey with us. So, again, we try not to speculate too much on what ifs out there. When we get the actual notice, then we start looking at it and responding to it.
But do these items higher price, but we're talking about a specific cutoff. So we're not talking about 3,000 to 10,000, we're talking about higher price. In that category, as someone who heads a consumer business and you you'd have a sense of it. Does it hurt? Higher taxation hurt sales of these products?
So
at the very premium end?
So we currently do have a slab already in footwear, Prashant, right? So we have the 5% up to, 12% up to 1,000 rupees and then 18% over that, right? So it's not like we're not in the slab business already, right? Taxation always increases prices, and that always dampens demands, if you look at it from an economist standpoint of view, right? So that is something that would happen, but I think that we always consistently looked at how we mitigate those things and how we are able to continue our sales plan and our sales growth as a business.
Okay, all right. Hi, sir. Good morning. This is Nigel on this side, and good to see you in, and thank you for all that clarification. Let's talk about business on the whole then. Everyone's hoping that Q3 has been much better than what we saw in the first half of the year. And for you, you'll also get some positive impact of the wedding season as well as festivities. Could you tell us, has Q3 been as strong as what everyone has anticipated and as good as what you were estimating? And is it good enough for you to do that 12 to 15% revenue growth for FY25?
So I think we guided to 12 to 15%, actually, to be honest, not 25, 12 to 15%. And I think
12 to 15%, beg your pardon. Yeah.
And we're definitely comfortable with the numbers we've seen. Fortunately, there's been no surprises, pleasant or unpleasant, through the quarter. But also, if you look at what's happening out in the market, there's been a lot of talk about slowing demand and slowing consumerism. Didn't we just read this morning about $10 billion worth of Apple phones being bought? There's also travel is on the rise, specifically international travel is now at 70-30 to domestic, international to domestic. Whereas if you look at it in 19, it was 30 to 70 the other way, domestic to international. So, what you're seeing is the consumer is spending in a hierarchical, seasonal manner, right? So when we came out of COVID, they rushed out and bought new wardrobes. They were sick and tired of seeing their clothes, sick and tired of seeing their shoes. Some of the shoes probably had dry rotted in their wardrobes, right? They went from that into eating out. We saw that big splurge. Then we see that going into travel. And now travel is going into international travel. And there's iPhones selling like crazy. So demand is still there. It's just a matter of where you fit in the hierarchy of a consumer's demand cycle, right? And that'll vary. We had the COVID bump up, and then we had the COVID dip, and then we've seen the normalization year come through this year, pretty much on track.
So you're sounding quite optimistic on what you've seen on demand on ground. In fact, very encouraging commentary, and also you're on track to hit that 12 to 15%. Tell us about the e-commerce business. I think it was around. It contributes, I think, double digit to your total sales mix. Are you seeing things plateau out there, or are you seeing decent growth out there as well? And for the year, what kind of a number will you look at?
Yes, I think we had a lot of catch up to do in the e-com space, right? And we weren't very invested in it pre-COVID. We started our investments at COVID, and we've continued to have some significant growth come out of our e-com business. At some point, you're going to see that normalize to it be in line with the rest of our businesses, because the rest of our businesses aren't exactly slouch businesses. They're very good businesses, right? So we are starting to see that it's going to be more in line with the normalized expected growth of the e-commerce business. Don't forget, we can always pump up that e-commerce growth if we're willing to go the discount route. And as you know, that's something that we believe as a brand. We do not believe as a brand to do is discounting. So, there's ways we can accelerate that growth if you wanted to, but it's really about being disciplined about how you grow that business.
What about Fila and Foot Locker? You said in FY26 onwards, the real impact will gradually start reflecting. In the next 3 to 4 years, you'll scale up these brands. Could you tell us on an annual basis, how do you see these brands scale up? If you could throw in a couple of numbers with a broad range.
Yeah, so I think, annually we'll be opening up Foot Locker stores and Fila stores. The exciting part probably would be at the latter calendar half of next year, you'd start to see opening Fila stores. As I said, the first year that we acquired Fila, the first year to 18 months was really a cleanup year. The last quarter to the next 2-3 quarters is going to be repositioning it. And then starting off in early calendar 26, you'll start seeing acceleration. But, we are seeing good indications from my initial launches of Fila that we now have in our Metro Mochi and our 2 lab stores of Fila. So we're quite pleased to see that. I think you mentioned that I seem optimistic. It's not about being optimistic. It's about business being on track, right? To me, I'd rather have a business on track than a business on fire. Either way, whether it's extremely good or extremely bad. We love businesses on track because, as you know, we love consistent performances. We love planned. We like performances coming coming in on plan. And Fila and Foot Locker, have a very solid plan behind it. It's, as always, not super aggressive, but it's definitely not conservative by any means. But we are building that bricks, and you will see us open a few more stores early in 25, calendar 25 of Foot Locker, and late in 25 calendar, you'll see us opening a few more Fila stores.
Okay. Mr. Joseph, just winding up the chat now, quick 2 points. One, if you could tell us where you are on that stated journey of moving towards 30% EBITDA margin. I think you're at around 26% as of Q2. So what are the timelines you're looking at? And if you could give us some idea of CapEx, I think the earlier stated intent was to open 100 stores. You're naming a couple of more Fila stores that you'll be opening soon. So just want to understand the cash requirements right now. How much of cash is in the books? Are you looking to raise any more money as you go ahead with the store expansion plans?
Great. So I think from the store expansion standpoint, we had guided Surabhi that we would open 225 stores in the 2 calendar years, this one and the following, 2 fiscal years, this one and the following year. We're on track for that. So that's definitely not an issue. And, I think that fortunately, Metro has great financial discipline and has a very positive cash business. So we would not need to raise cash to do those new stores and be on track with our 225 stores for the year.
And the margin, 30%? By when?
So we do track right at about 30%. We're not that far off 30%. And, so there will be some years that we go a little bit north and some years we go a little bit south. And, the Ind AS accounting also does affect that from time to time. But when you open a glut of stores in a certain quarter, but, we're very confident that as a business, we'll deliver right around the 30% EBITDA pretty much year on year.
All right, Mr. Joseph, we'll leave it there. Thank you very much for your time. Great speaking with you here on CNBC-TV18 as always, and good luck to you and your team. We'll take a quick commercial break here. We're going to come back. We have Sanjay Kumar Jha of Mishra Dhatu Nigam. That's a sort of alloy maker, supplier to defense companies, the space program here in India. We'll talk about Defense Acquisition Council approving projects worth 21,772 crores recently, and what this could mean in terms of fresh orders for Mishra Dhatu. Stay with us. Welcome back. Let's revisit Indus Tower, which of course is sold off from the day's highest point. Nimish, of course, told us about the block, the fundraise, etc. He's back with us to put the spotlight on this one. Nimish, over to you.
Well, Prashant, as you rightly pointed out, deal done. And as I had suggested that it might happen in the block window, it indeed happened in the block window. So that suggests that the demand was quite strong. So 3% clean out rate from Vodafone PLC. From a buyer's perspective, I understand there is a good mix of both FIs and DIs who bought in today's block deal. Now the next step, which is what it means for Indus Tower and for Vodafone India. Vodafone PLC is now going to infuse 200 crores into Vodafone Idea, which in turn will pay off the debt of Indus Tower. As of September, the outstanding dues of Vodafone Idea is around 3,500 crores for Indus Tower. So that looks like 2,000 crores will be paid off from that fundraising which Vodafone Idea will do from Vodafone PLC. This means that this works out to close to 7 rupees per share for Indus Tower, which a lot of analysts believe, and Citi, JP Morgan, all have written as well, that this will be given back to the shareholders as dividend. In fact, Citi goes on to say that, after this entire proceeds getting paid off to Indus Tower, going forward in 26 and 27, the dividend yield could be close to 6% as far as Indus Tower is concerned. So a big overhang is out of the way. Now the next step would be how much money does Indus Tower gets, and two, if Vodafone survives, then obviously it means a better business for Indus Tower going forward.
All right, Nimish, thank you very much for that. That's Indus Tower, which is in focus. Well, let's go back to Mitesh for a quick check on markets as well. We're down 40 points. So after everything is said and done, the Nifty now down to what the GIFT Nifty was indicating at 8 o'clock in the morning. Mitesh, how do you read things and any trades?
Yeah, Prashant, I think, as I said, this still feels like some intraday volatility to me, and closer to 24,350 is my pivot level. So I think anything close to about 24,380, 375 would invite longs on the index with a 45-50 point kind of a stop. Having said that, on the stock side as well, I have a positive bias. Tata Alexei I think that's the stock which I would like to recommend. Buy here with the stop below 71.90 and look for target of around 7,500 to begin with. And the other one which I like is Bosch. That's after correction is showing signs of bounce back. So keep a stop just below day's low of 34,950 and look for target of 36,200.
All
Two
right.
big names, Bosch and the other one as well. Just a quick word on check on BSE and CDSL. I just want to highlight these names. Mitesh, I don't know if you have any thoughts here. 4% on BSE and CDSL is up about 4% as well. And of course, I think we were highlighting the Zomato stock at the bottom of the screen, almost at about 300 rupees. Any trades here on BSE or CDSL?
BSE, I'm not sure, but CDSL, I think, is still showing continuation signals. So as long as the stock is above 1730, I would look for targets of around 1900. And on any 10-20 point decline, longs can be taken with a stop below 1730.
Okay, just want to point out, thanks Mitesh so much for that. I just want to point out, folks, look at the market.
Yeah.
Completely turned, the color. Absolutely turned. And again, like yesterday, it's a very sudden fall. We were nicely cruising along. The Nifty was up about 50 odd points. And now look at it. Suddenly it's down 50 points. And not just the Nifty. Bank Nifty is also weak. Mid-caps have lost their mojo. Just pulling up the list of Nifty losers for your reference. NTPC, Bajaj Auto, JSW Steel, SBI Life, Cipla, Shriram Finance, Power Grid. As you can see, it's not just one sector. It's like an all fall down situation.
Well, that's right. And I think the stock of the morning actually is Zomato. The last from the time Swiggy has listed, Swiggy is up close to around, I think, 20%, while Zomato is up only around 9.5% at the start of today. Now it seems that Zomato is pulling back that underperformance, and as we speak, the stock is nearly 300 rupees or thereabouts. At the start of this series, we had mentioned, that this could be the stock of the series and maybe the next one as well. It comes into the F&O. It probably gets into the Nifty as well because that criteria gets fulfilled. And it was a relative underperformer in comparison to Swiggy. But as Karan Taurani as well told us, there is a valuation gap between the two. And he believes there's a good case that this valuation gap will stay as well. Mitesh, any view on any of these two names? Both those two, Swiggy as well as Zomato, now at the high point of the day. For Swiggy, I think, there'll be some of that shareholding that is blocked that gradually comes to hit the market. But any view on both these two names? How are they looking on the charts?
Like Swiggy, the data is very limited to, understand it, the chart properly. But Zomato, I'll start with the disclaimer that I have positions over there. So there's vested interest. And the stock has broken into fresh highs. I think a breakout like this could possibly suggest further continuation. And now the buying zone will be around 290, 288. So if you get it there, I think buy with a stop below 280. And I'm looking at a target of 320 here. But as I mentioned, I think there is vested interest. I have call options positions in Zomato.
What about Sirma? Any thoughts here? Last 2-3 days actually starting to correct from its recent highs. I mean, I think high was about almost 600, 540, 550 now. Mitesh?
Which stock is that, sorry?
Sirma.
Oh, I'm sorry, I'm not tracking the stock, so I have no idea. Actually, never looked at the chart.
Okay. And Divi's is the top volume-led loser on this one. Any thoughts? I mean, it's news-related, but it did very well. And it basically, I think, got back to high. Of course, I think last month crossed the highs of 2021 at about 6,050.
That's right. Also is the fact that I think it's first signs of profit booking over here. While the medium to long term charts remain good, I think in the short term the stock is signaling loss of momentum and could go into consolidation. My advice is very simple. If people are long here, exit, take profits, wait it out. The stock could be available between 5,800, 5,750 again. That's the area to enter.
Put up the stock price for Castrol India, which is up 4%. 216, and Mapma India. Mapma India is the other one, which landed itself in a fair bit of controversy on corporate governance issues, etc. We spoke with the management, by the way. It made a low of about 1575, and the stock's recovering a little bit. So 1634 or so. High on this one is almost about 2,700, 2,800 rupees. But as promised, I think we have the management of Midhani with us.
Well, let's focus on Midhani then. Yesterday I had news that the DAC had approved proposals of around 21,000 crores. So there's an immense opportunity for a lot of companies and the metal alloy manufacturer as well, Midhani, which is focused on defense as well as space, could stand to benefit. We have with us Mr. Sanjay Kumar Jha, the chairman and MD of the company. Hi, Mr. Jha. Good morning. Always good to see you win. Well, the stock has seen a big rally of late. It's up more than 20% from the recent lows, though it's still 30% off the peak. Let's find out about business. Could you give us an updated order book? The last we have is, I think, that for the first half of the year, the order inflows was around 1,000 crores and you were guiding for another 600 crores. Is that on track? And break it up for us. Most of your order book currently is still defense, right?
Yeah, first of all, regarding order book, this year we are expecting a total order book inflow of around 1,700 crores. So already 1,100 crores already we have received, and another 600 crores is expected in next 3 to 4 months. And regarding the composition of the order book, yeah, of course, defense is maximum today. And we are expecting that, in fact, other sector also will pick up. But more important part in this order book is a component of export. So export order book, I say this year the booking is highest so far, and also expected to increase further. Last year we did export of around 67 crores. And this year we are expected to cross more than 100. So we are targeting around 120 crores of the export this year. And we have a good visibility for the inflow of the orders coming from the leading, mainly the aerospace companies of the world.
Correct. Tell us a little bit more the order book then, sir. 1,700 crores is the order inflow. The titanium segment, that is gradually getting a lot of attention. As a percentage of your order book, how much is it? And how do you see, that segment shape up?
Titanium in our order book is taking the place of around 25 to 30% in that segment. And superalloys is another area which also is having a very good inflow. So both the segments, superalloys and titanium, is almost the order book position is more than 1,000 crores out of 1,800 crores which we are having today. So this is a very good change in Midhani's profile of working, because earlier we had most of our order used to come in the special steels category. Correct. So that special steel category is still there, but then superalloys and titanium has increased further.
Okay,
so,
all right.
And these are the very specific to certain high-end applications in the defense and aerospace. So we are expected to improve our performance of the company based on the execution of superalloys and titanium production in the large quantity.
Got it. Mr. Jha, before my colleagues come in, I just wanted to clear up 3 numbers. That's the near-term guidance. For the first half of the year, the revenue growth has been only around 3%. But we know for you, Q4 is the biggest quarter. You were earlier guiding for 20% growth for this fiscal year. Do you stick by that? What will the margins look like? And give us an idea on the working capital days. Because for you, that was large. You were looking at bringing that down as well with inventory days under control. So 3 numbers: revenue growth, margins, and working capital days.
Yeah, revenue growth, as you have rightly told, that our second half is always on the higher side. So this year also we are expecting our H2 will be on the bigger scale. We'll be doing that, and that is a part of this. Regarding the margin, already we have been reflected that our Q2 has improved almost from Q1 very high, and I am expecting that Q3, Q4 will be still better, and overall impact will be seen in the our FY25 total performance, and I am will be maintaining the good margin. I'll say not like the earlier of 20% on, but our idea is to reach cross the last year we had a very around 9%. So our trying to see that how we can cross or near around 10 to 15%, or 12 to 15%.
No,
Right.
sir, which numbers are you talking about? Margins, sir, as we have, is around 19%. The EBITDA margins is what we're referring to. For the year, what should it look?
I'm asking on the PAT. I'm talking about the PAT. But EBITDA also will be almost around the 20 to 25% around.
25% top line growth will be 20%. EBITDA margin will be in the vicinity of 20 to 25%. And working capital days will be what?
Working capital days, last year we have come to almost 120 days. You are talking the receivable, not the working capital?
No, the working capital, sir. The receivables, payables, as well as the inventory, put it together. Working capital.
So our idea is to bring it to the level of around 3 months. 3 months, but right now we are, last year it was around 4 months. So I'm trying to bring it to the 3 months this year. So far, the performance is good. So let's see that how we can, because our aging, our sundry debtors is very less today. More than 1 year is very less. So we are expecting that it will improve further.
All right, Mr. Jha, just one question. When we see these orders come in from defense forces, and you were you will supply to these on the defense side. What is your sensitivity to the three forces? I mean, in terms of orders which come in, or is it it doesn't matter? I mean, do you have higher sensitivity to in terms of supply to Army, the Air Force, Navy? Could you give us a sense?
See, if you see the application of high-end materials, aerospace or Air Force is on top. The Navy also is there. So the two fronts, mostly the naval requirement, and we are not giving directly our material to the services. It goes in the different platform to the other vendors. So directly it is not there, but in fact indirectly also if you see, the application of niche materials are basically both in our air and also in the seawater. So both the things, that area is dominant. Regarding our armed forces also, we are doing something like in the armor category, that lot of work we are doing armor one. But as far as the alloys and high-end alloys are concerned, the Air Force and then also we have this naval system are taking the, I think, bigger pie of our order execution.
Sir, Mr. Jha, you said that obviously you're getting more export opportunities. So tell us also where are these markets where you're exporting? And this is a bit of an out of context question maybe, but we're just trying to understand from a learning point of view. Now we know what's happening globally, right? All these trade wars are happening. And the highlight of last week was China saying we're not giving rare earths to the US for their security and military needs, right? I think they spoke of gallium, germanium, a couple of these other elements. Now, I don't know if you are into any sort of materials or alloys which can be a replacement or whatever. What we're trying to understand, question is, first part of the question, which are your key export markets? And second part of the question, with trade wars happening, if China limits the supply of these materials used for semiconductor and defense, can Midhani benefit in any way?
Hey, first of all, I want to make clear that we are not in the area of semiconductors material. What we have the application of rare earths metals is mostly in the alloying of making the super alloys for the application in the aerospace, aero engine per se.
Sure.
So that way we are not having any impact because of this type of supply chain issue. But as far as the other segment is concerned, like you are talking about the different segment in the export side.
Yeah. Which are your big markets?
We are targeting the export in our expertise domain of high-end alloys, which is nickel-based alloys, super alloys, which goes in the core of the aero engine, which goes in the outer many manufacturing of the aircraft. Also, it is going in the domain of, let's say, in the oil and gas in the high-end applications. So these are the areas where we are targeting with our nickel-based alloy. Titanium also has a specific application in the aero engine and the aircraft. So that also we are targeting in that side.
And are you exporting most of these alloys, the nickel-based alloys, titanium, etc.? Is US the main market? Is it Europe? Where are you exporting to?
We have a various customer. Today it is going to the US also, and today it is on the European market also. And we have at least 20 to 25 different customers we are serving our materials. We are also seeing in our special alloys goes in the healthcare also. So we know that many specific grades are required in our manufacturing of our health care related equipments, which in India it has to pick up yet. So we are serving the international market today.
So it's good to know, sir. We just wanted to know because you never know these days with all these tariff talk and wars. Someone bans someone else. We just want to know what's your area of expertise internationally if there is a kicker coming in. That's it.
Mr. Jha, just one last clarification. You said another 600 crores in orders in the next 3 to 4 months, right? You said.
Yeah.
Okay. All right. Got that. So by the end of FY25, order book should be what, sir?
Order book will be in the range of same around 2,000 crores in that domain only.
Okay, I think.
See, our orders, we cannot pile up the long order book because execution time is very short. Today, nobody is willing to give the long-term orders. So, and of course, we are looking for certain long-term contract, which we are yet to decide. But today, the turnaround time for the giving the order and execution is hardly in the months. It is not coming in the years. We have to put in 3 months, 4 months, 5 months like that.
Okay, we should. I think we were carrying one. There was a flash saying 600 crore order book by in H2, 600 additional orders in H2. So 2,000 odd crore order by the time Mr. Datu finishes F525. So we'll make that correction. Thank you very much, Mr. Jha, for joining us. It's a pleasure having you here. We take a break. Manisha on the other side. Commodities in focus.
Welcome back. Let's shift focus to the commodity markets now. We have Manisha joining in. Manisha, so we discussed the Bitcoin headlines earlier. What else are you tracking?
Well, you know, it's been a very peculiar year, a year where you've seen the dollar index continue to gain, precious metals are higher, and so is Bitcoin and various cryptocurrencies. So it has been a year where you've seen buying happen into many of these safe havens apart from the fiat currency there. Well, I'm talking about silver right now because we've seen stronger gains come in for this one as well. We're trading at 1 week highs right now. 3% of gains is what we've done in this week. And for the year, we are up by 32% till time right now. Well, silver also seems to be going forward strong. That is because markets are anticipating China's stimulus expectations, and that is keeping the industrial metals and silver prices both on the higher side here. It also has to do with the Indian silver prices, where we've seen ₹1,00,000 per kg here in the month of October. From those kind of levels, of course, we've seen some bit of a decline coming in, but silver is ending 2024 as a fourth year of deficit in the global markets, with an expectation that 2025 could also see deficit continuing in sense of global supplies there. Well, the markets also have seen industrial usage in sense of silver continue to gain, and that has been supportive. If you look at those prices, if you look at those numbers, you can see starting 2021, the demand has been higher than supply going forward. 1.2 million ounces of demand is at record highs, and the street anticipates higher number going forward in 2025 as well, while the supply or production perhaps will not be able to catch up. So that clearly is supportive. Industrial demand when it comes to silver is 60% of its overall demand right now. So that tells you that going forward, the kind of tariffs, trades, policies, especially when it comes to renewables, EVs, all of going to be very important in 2025 there. Coming back to the prices then, and an all-time high in case of silver prices is way back in 1980 during those Hunt brothers at 49.5. In this year, the global silver prices finally broke a 12-year highs, and we did see prices at almost $35 an ounce. Currently, we are trading at 31, and the street does believe that higher highs is what you could see going forward, at least in the next 2 to 3 years as well. If I show you the prices, then average prices have continued to gain up as well. The last couple of years did not do much, $21 to $22 an ounce of an average price. But this year, we definitely have taken a leap ahead at $27 an ounce of an average price and $35 of a higher price in this year as well. Going forward, the expectation is that you could be looking at higher prices. So from JP Morgan to Citi to Bank of America, most of them believe that $35 is what Bank of America says, but 38 to 40 on the higher side is what you could be looking at in 2025 in case of silver prices. If you do the maths right, then that means 25 to 35% of gains in the next year as well in case of silver prices.
Okay. Manisha, thank you very much for that. So that's commodities in focus as always, and precious metals is what we sort of shown the spotlight on today. Well, let's get a quick macro outlook on 2025. Aurodeep Nandi is India economist at Nomura. He's joining us now to take some questions. Aurodeep, We'll get to specifics and from your report in just a bit. But at a broad level, for our viewers, I mean, what matters is asset prices and financial markets. And that kind of mirrors what kind of activity you will see on the economy side. In 25, looking a little more, is it looking tougher as compared to the last few years? Let's just start there.
Yeah, I mean, look, we think that the Indian economy is in a cyclical slowdown as we speak, right? And in fact, for FY25, we've downgraded our growth projection to 6%. For FY26, we're looking at 5.9%. Yes, there are some temporary factors that are at play currently. For instance, the government isn't spending enough, or we had some issues with the last quarter. But what we are more worried about is the fact that, one, on the global side, it's going to be a much tougher environment with the Trump policies coming in on tariffs, on around immigration. So it's going to be a tougher global environment. And also within India, the urban pent-up demand that was there post-pandemic has largely dissipated now. And on the urban side, it is showing up in terms of the macroprudential tightening which the RBI has done is showing up in terms of lower credit growth and is going to impact demand. The other thing also is that be it in terms of employment, be it in terms of income, they haven't grown strongly. So add to that the fact that private capex has yet to pick up strongly in an environment of global uncertainty, in an environment of weak domestic demand. And then you put that together, and then you say, okay, what are the positives, right? And the positives are that rural demand should be better because we have, at this point, a very good monsoons.
You kind of describe the picture. Let me just come in here. Can it be helped, the negatives, can it be helped through monetary or fiscal policy?
Oh, absolutely. I think for monetary policy, our view is that the RBI should cut tomorrow, right? Monetary policy has to be forward-looking. It has to be counter-cyclical. So we not only have the first cut on the 6th December policy meeting, but we have a deeper rate cut cycle of 100 basis points. On the government side, I think the capex run rate has been much slower than what is required for the year. So I think from the government side, it's actually pretty simple at this point. Ramp up spending to meet the targets that are already there for the FY25 budget.
Auradeep, let me just go back to that. So you're saying a 25 basis points rate cut, not a CRR cut, right? Tomorrow.
We are also saying a 50 basis point CRR cut.
Wow. So you're saying 25 basis points repo plus a 50 basis points CRR. That's going to be a massive bazooka, right? Which takes me back to your overall note, because I think that's not just a knee-jerk call on the GDP. You're expecting India to see aggressive rate cuts in the Asian region as well. So just expand on that. And how does the RBI do this? How does it inject this big bazooka of liquidity in a rate cut at a time when inflation is trending above 6%?
I mean, we need to figure out what is contributing to that inflation, right? Once you take vegetables out of the CPI basket, inflation is at 3 to 4%. Core inflation has been low for a very long time. So the question is, if growth was strong, you could hold monetary policy tighter. But when your forward-looking forecast is pretty well anchored at 4.5%, and you're at a point where, I mean, the GDP print that we got of 5.4%, I mean, let's not kid ourselves, that is pretty shocking, right? India's trend growth is 6.5 to 7%. So that is not normal, which means that not only does the RBI need to downgrade its GDP forecast for FY25, which is at 7.2% currently, but also means that it has to reassess its confidence as far as the growth cycle is concerned. And again, the impact of the first rate cut now will only be felt in the economy around 6 to 9 months later. So, this is the time to do the rate cut because monetary policy, as I said, has to be forward-looking. The CRR cut is primarily because there's been a lot of forex intervention, hence liquidity out of the system, and so there is then the need to infuse durable liquidity. So the CRR cut comes from there, but on the policy easing, I think we need a pivot soon.
Absolutely. Government spending, again, should not be any issue. I don't know why it should be constrained now, right? I mean, too much focus on the deficit. And I think this, I remember having discussions around the time of the budget, not just this one, but the previous one as well, when that's, government spending targets, etc., for budget estimates were brought down sharply. So do you think we will see a change in track there as well?
I mean, one is, actually, I completely agree with your view that there's technically nothing stopping the government now, right? So there is no election, there's no constraint on them. But I think there is also an issue of the institutional capacity to spend, to get all that money out of the door by the end of the fiscal year, given that we had a late start to the year. So I think on the RevX side, there's been some growth. We were really hoping that the October number for capex growth would be stronger because there was nothing stopping it, but actually it's still continuing to contract. So I think there is an issue in terms of sort of being able to drive up the spending. So a lot depends on the government sort of telling departments and getting this engine running again, because private capex isn't really in the picture. So much of this investment growth that we see in the GDP statistics is essentially reflective.
What's the number?
Public capex.
Auradeep, sorry, we're so sorry we're rushing you because we're hard pressed for time. But just on government capex, second half, what's the number or the pickup that you're expecting? Because the first half was contraction in government capex. Just leave us with the numbers that you've penciled in right now.
So the way I'm thinking about it is that, reaching 11.1 trillion rupees, which is the budget, may be difficult. So there might be a saving of $1 trillion or so from there. So our baseline view is that the government will probably get more capex this year than last year. So there'll be a year-on-year growth, but probably will fall short of the 3.4% of GDP or 11.1 trillion rupees, which they have budgeted in the FY25 budget.
All right, Auradeep, we continue to track all of this with you. It's a great conversation. Thank you for joining us and looking forward to the next one. We'll see if the RBI does sort of oblige with a cut, although that is not consensus, and of course what the government does as well. 85 points lower on the Nifty, 24,384 is where we're at. It's time for a quick break. It's the economy. Lata will be chatting with Arup Rakshit of HDFC Bank on what to expect from RBI MPC tomorrow and how a CRR cut or a repo cut will impact banks. Stay tuned.